Hi everyone, Alex from Summerhill here. As we begin the new financial year, I just wanted to take a moment to share a few of the key updates effective from 1 July, along with some changes coming down the track. So in today's update, we'll cover superannuation changes from 1 July, an update on the proposed tax for super balances above 3 million, aged care reforms, which have been delayed until 1 November 2025, and a quick reminder about managed fund unit price movements following the year-end distributions. So starting off with superannuation changes, the transfer balance cap is increasing. So the transfer balance cap is the limit on how much you can move from superannuation accumulation phase into a retirement income stream pension. And this is set to increase from 1.9 million to 2 million from 1 July 2025. The higher cap won't affect those who have already fully utilised their transfer balance cap. However, it does open up some opportunities for those who haven't yet started income stream pension or still have some room left under their personal transfer balance cap. Additionally, those that are in, say, a retirement transition to retirement pension and expect to meet the full condition of release this financial year could be relevant for, or those previously ineligible to make non-concessional, so after tax, superannuation contributions may qualify this financial year. For some of you, we've held off on starting an income stream to take advantage of this increase, and we'll be in touch this month if that relates to you to discuss your options. It's important to note that the superannuation contribution caps, though, are remaining unchanged this financial year at 30,000 per annum for concessional pre-tax contributions and 120,000 per annum for non-concessional after-tax contributions. So moving on from 1 July, the superannuation guarantee rate will increase from 11.5% to 12%. So most employees will receive this as an additional employer contribution. However, if you are under a total employment cost arrangement, your take-home pay could reduce slightly as employers adjust for the higher SG rate. For those running small businesses, it's a good time to check payroll systems to ensure compliance. And if you have salary sacrifice arrangements in place, important to review to account for the increased SG rate. Moving on, a quick update on the proposed tax on superannuation balances over 3 million. So this is also known as Division 296. Many of you have asked in recent times about the proposed additional 15% tax on super balances above 3 million. And just to recap, Division 296 is a proposal to apply this extra tax on earnings linked to superannuation balances above 3 mil, starting from this financial year. Now, the bill was introduced to Parliament during the government's last term. However, it effectively lapsed when the recent federal election was called. This means that the government must reintroduce a new bill when Parliament resumes on 22nd of July 2025. Once reintroduced, we'll be able to confirm the details, including whether there are any changes to the commencement date, thresholds, indexation, or earnings calculations. If passed, the ATO's first assessments will be made in the 2027 financial year. Therefore, even if it was introduced effective 1 July 2025, you would still have up until 30 June 2026 to make changes to your superannuation arrangements to avoid or reduce the impact of the tax if it is introduced. Now, we're monitoring this closely and we'll keep you updated once more details are available. Moving on to aged care, in our last video update, we highlighted some significant reforms to aged care, which were due to commence on 1 July. The government has since delayed the start date of the new Aged Care Act to 1 November 2025. So this will apply to both residential aged care, where new fee structures, including changes to care and accommodation costs, will be introduced, and in-home care, where the new support home program will now begin 1 November 2025. Until then, current programs like the home care packages and government home support program will remain available. If you're navigating aged care for yourself or for a loved one, please don't hesitate to reach out and get in touch. If we're here to help if we can. And lastly, a quick reminder, managed fund unit prices typically drop from the 2nd of July, so as of today, as year-end investment income is distributed. So this means you might see a temporary decline in the value in your portfolio from today until when those income distributions are paid, usually around mid-July. That's it for us for now. If you have any questions, please don't hesitate to reach out. Thanks for watching.